Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in the stock market and also how you can be financially independent. If you're new to this channel, please consider subscribing so that you don't miss out on other new uploads. Of course, don't forget to also share and also like the video, and if you're returning subscriber, welcome back. Today I'm going to be talking about a company called Kenya Power. I think since late last year 2024, many people have been talking about it, many investors have been talking about it. And also, if you follow this company, or if you follow Nairobi Securities Exchange, I'm sure by now you should be knowing about it. And also, if you're new to investing, definitely this is one of the companies that you should be following up. The reason why I'm going to be talking about today, actually, it released its 6 months half year results, and actually many people are discussing on different platforms on how this is it a buy, should you be buying a company because of these results, or should you be selling the company, or you should be waiting to see. So these are the things that we are going to be discussing, but before we discussing, let's first see talk about what does the Kenya Power do, and what who are the shareholders, because if you're going to invest in any company, it's very, very important to check who are the shareholders, who are the people who own it, and also the largest shareholders, because for me it makes a very big difference to make a decision when I know the people who own the company. So without wasting time, first of all, I want to make a disclaimer. I'm not an investment or financial advisor. So if you're going to invest in any business or in a company, please, I request you to do your thorough research, because investment do carry a lot of risk. So let's go directly to the basically the brief description of the company. So I went directly to Google. This is my search engine. You can use your own. So it says Kenya Power and Lighting Company, commonly known as Kenya Power, or shortened as KPLC. This is what is listed. Is public liability company which transits, distributes, and retails electricity to customers throughout Kenya. So it does three things. It does the transmission, distribution, and retailing, which is selling of electricity to Kenyan people. So it is headquartered in Parklands, Nairobi. This is the offices if you're going to visit. Kenya Power is public company listed on Nairobi Securities Exchange. The company is national utility company managing electricity metering, licensing, billing, emergency electricity service, and customer relations. Basically, it is a monopoly. So I'm not going to read through all the things. Other people, you can see the predecessors. So basically, this is the information you can read through. I'm not going to read everything. What I'm interested in, of course, if you follow me, is the shareholding. So there are 20, it says 20 largest shareholders in the stock as of 31st 15 August, illustrated below. This is outdated, but most of them, they are still the same. Ministry of Finance, of course, this is the government of Kenya. It owns 50 plus 0. 0.09. For me, if you follow my channel, you know that I run away from the companies where the government owns 50%, because most of the East African governments are corrupt, and because of this, they do funny decisions that affect companies. So for me, I'm not for that reason, I'm not yet invested in. Before I had invested in it, but when it started misbehaving, I did sell my shares, not on loss, because I had completed bought it at very, very cheap. So the other owners, mostly their investment, their investment companies, KCB nominees, CFC nominees, custodian nominees. All these ones are investment. Mainly, most of the time, these are the money market funds. So basically, if you can see, mainly they are companies and also some few individuals. Definitely, you can check through. So these are the top 20 owners and other shareholders. If you also own it, you're under other shareholders. Actually, for me, this is a slightly evenly distributed investment company, which if you like it, it should be good, apart from the Ministry of Finance that owns 50%. So basically, that's what I can talk about it. But let's go to the figures, which I would like to discuss. So it says the Kenya Power and Lighting Company unaudited trading results for the 6 months ended 31st December 2024. So I'm not going to be reading all the things, the highlights. So it says that in the half-year trading period ended 31st 24 December, the company recorded profit before tax of 14.06 million, representing an increase of Kenyan things 13 point, this is 13 billion, in fact 13 billion compared to the 500 million recorded corresponding last year. So the growth is extremely very amazing compared to the last year, from 500 million to 13 billion. It's a very big milestone in terms of growth. I'm not going to go through the sales. You can read through. Then you can power purchase costs decreased by from 71 million. This is a billion, 71 billion to 1.6. This is billion. This is something also extremely very important, which was also costing the Kenyan Power operating expenses, they rose by 14 million to 23 billion. So basically it also rose. Financial costs, they also rose. So for me, what I'm interested in, you can read through. Actually, this is where you get a lot of nitty-gritties which help you to decide whether you're going to be investing in a company or not. And that's why I'm going through. You can read through. I'm not going to read everything, but for me, what I like is this interim dividend. It says the board of directors is pleased to announce an interim dividend of 0.20 per share. The interim dividend will be paid subject to withholding tax where applicable on about 11th April 2025 to shareholders registered in the books of the company at close of business 28th. This is closing date. So if you'll be in the book by this time, definitely you will get a dividend. So you can read through what they are going to do, the outlook, and by order of the board, this is the secretary and he signs out. Basically, please take time to read through this information, because it's the one that actually makes the basis for either selling the company or owning the company, because the figures normally they actually the most important, but sometimes you need to know why these figures, because these are the statements, they explain the figures. So let's go to the figures directly. So if you check here, revenue from contracts with customers 2023, it was around 113 billion. 2024 it declined, but cost of sales, it also declined. So the reason why the gross margin went up, it was because the declined cost of sales as per the report. So basically gross margin, it increased. And let's go here, other income, they also declined a bit. So Basically, operating costs, they also went up as per this report, but always don't read this report in summary. You need to go to the report, the full report. They will release a full report describing each and every item and how these financial costs or operating costs, where they went one by one. So it's always very, very important. So also the financial cost, as per the report, they say they reduced the financial cost, which is also extremely very important. If you can see here, last year is the one, it was the deal breaker, but here it's also a deal breaker because the difference is very, very huge. So, and the profit for the period, sorry, so, and the profit for the period is 9.9 billion compared to 319. Basically, they are describing as of last year. So here the game changer was the financial costs. So basically, and this is the basic and diluted earnings per share. It gives you 5.11 to 0.16. So you can see that actually they made a very, very great improvement, and they are giving an interim dividend. You could just wonder why out of these five Kenyan shillings, why are they paying only 0.2 dividends? So we are going to see it in so what we can say, basically, this report is financial statement, which is complete income statement, and this is balance sheet. So basically this one describes more of sales, profit and loss. This one mainly is always describing the equipments and also the equity. It also describes mainly the loans and also all the equipments, the payables, all the items here. So property and equipments, you can see it went up. Non-current assets, they reduced by, and also the current assets, they increased. So always don't read the summary, always go into deep. Of course, at the end of the day, they will bring the full detailed report showing all the details of what all these figures mean. So it's always important. If you're going to invest in a company, don't read this summary though. They do give you a good picture. So equity, shareholders equity is up to, it increased from 87 to 97 billion Kenyan shillings. So this is also a great milestone. Current liabilities, non-current liabilities, these are always the borrowings, which are always most of the time long term. So, and for me, the biggest issue with Kenya Power, as I discussed some time back, is always here. Yes, I can see it went down by around 2 billion, but this is not enough. Here you see current liabilities went up by 2 billion. It's like vice versa. So nothing has mainly changed. So where, for example, the debts are more than the equity, it looks like you're working in a loss. So you can see the non-current liabilities is 163 billion, non-current assets, and current assets is, liabilities is 107 billion. So almost they are around 200 billion borrowings or in debts. And you can see the equity is only 97. So like what you can call the real company ownership, around 97 billion. So this is a red flag for me, even if it is making profits, as long as these losses, borrowings, are not yet reduced. For me, I'm not yet interested in buying this company. So the reason why they paid less money, This money, of course, will be used to pay the debts, but you can see 5 billion, they will need up to how many years? Up to maybe 10 years to pay the half of this amount of equity. And of course, this is, I know it's a capital intensive business, but their debts still are not yet, to me, they are not yet to the level whether they are attainable. So for me, I'm not able to invest in this company, though of course it is profitable and it is a monopoly at the moment. So if you're going to invest in a company, you're sure that in the next few years, definitely it is going to be existing. As I said, it is monopoly, and but people are always like wanting to actually, to the parliament always talks about it. They always want to break this monopoly so that they can be other companies that will be supplying power. So basically that is what it is. Definitely I cannot go without discussing the last financial statements for the company, so that you can see how it just made profit last year. So if you're going to invest in a company, I always go to my market screener, then I go to my financials, then you go to, you can either go balance sheet, but for me I prefer income statement if you want to check the profitability for the company. So I can see since total revenues are always going up, but the problem is always the expenses. So I will go directly, I'm not going to read through, but as I said, if you want to check the all the things, always read through every figure so that you can know where the loss is coming and everything. So for me, I always want to go to the net income, because the net income describes every cost that has been deducted on the revenues that has been added. So you can see it made, last time it made profits. So you can see it made, that was 2015, 7.2 billion. It went down to 19 billion. It went down to 262 million. So if you are wise enough, like the way it is going down, mainly I would have cashed out. So now it made negative, means a loss. It went to a profit. It went to a profit, but it again went to a loss. So you can see their incomes has been up and down, up and down. And in this situation, you don't want to be in a company that is having revenues that are like this. So last year, it made a profit of 30 billion. Actually, that's what made the company to skyrocket if you check the price. So basically, you can see the net income has been up and down, up and down, and this is not what you want to be part of if really you want to be a true investor. So I will go to maybe to the last, like, which is the profitability or the share. You can see the share is now at 6.78. But if you can go to, I want to show you what happened when they announced the profitability. So 1 year, you can see in Feb around 2024, it was 1.47. So it kept on, actually sold before around 1.8. I sold around from 1.8 up to here, because I had got something better. So but from there, when they announced that their results, the thing skyrocketed up to 6.9. So you can see that also the payment or the profitability of a company definitely will push up the company. But when they announced the dividends of 0.70, that's when the company went up. So basically, that is it about Kenya Power. So what is my personal opinion? First, before I give my personal opinion, actually I've observed that most of the viewers are not subscribed. And if you're here, it's not yet subscribed, please, I would like to request you to subscribe, share, and also like, so that it can be recommended to other like-minded people. So what is my personal opinion? I still have two issues with Kenya Power. One is the government ownership of 50+1. And you know, I always talk about East African governments owning majority of the companies. I don't like that. Second is the like up and down finances, or the net incomes. They are always up and down, and I don't like that. The third is the borrowings. You saw in our non-current assets up to 130 something billions, then current assets 100 billion. So almost you can see they have around 230 billion in borrowings, yet they are getting the net earnings of 5.1 billion. So it would take more than 20 years to repay all the debts. Though it on the surface it is improving, but for me I would need up to maybe next 5 years to check whether they have really improved. Like last year they made a profit of 30 billion. If they make another 20 billion, 30 billion, I will know in the next 5 years they will have improved, because they will have paid up to 100 billion Kenyan shillings. But for me, as of now, I know I have better companies. Kenya Nairobi Securities Exchange has better companies than Kenya Power. Though, of course, in the short term, people have made a lot of money. So if you're a newbie, if you're a new person, please try to avoid this kind of companies, because they can affect your investing, especially if like next year it makes loss or it makes less money, and most of the people sell their shares, it will go down and it will affect your morale. So as I always say, please, if you're going to invest in any company, in any business, please make your thorough research, because investing carries such a risk. If you have any question, if you have any comments, you have any suggestion, don't forget to put it in the comments. I will immediately go and respond to you. Once again, I'm very happy that actually the subscriber base is going up. So this one reflects that our quality of work. Have a wonderful day. Goodbye.